The last video that I made on USD JPY isn't working properly. I don't know what happened in that video. Perhaps there was some error in the computer. It was not captured properly, so I'm making the same video again. So here I'm going to discuss two different scenarios on USD JPY. One is bullish, another one is bearish. So if you look at the recent swings of the USD JPY, it looks like market is going to make a downswing here, similar to the downswing you can see here. This downswing, this downswing, and this downswing. Nevertheless, if we look at the another behavior of the swings of USD JPY, we still have a bullish scenario because this current upswing didn't go above the previous high, whereas all previous upswings actually penetrated the previous high. If you look at these high, this 1, 2, and 3 highs, not only penetrated above the previous high, every new high made a new high almost around 20 pips above the previous high. If you compare the length between these highs, it is around 20 pips. So this time there is probability that the market will go up and make a new high above the previous high around 110 area, because 110 area is a psychological level. So let's first discuss the scenario to the upside, I mean bullish scenario. So I'm switching to the 1 hour time frame. There I'll show you what's actually happened and why I'm suggesting to buy. I'm suggesting buy because the selling pressure on USD JPY didn't work well. Sellers came in the market, but buyers actually won the game. This looks like a Gartley kind of setup. If I plot triangles here, this will look like a perfect Gartley. And this is the final hope for bears. Earlier market tried to fall from the recent resistance level, but it didn't succeed. The recent resistance level was made by this previous swing low. You see the swing low. So previous swing low works naturally as the resistance level. Market went up and this area coincided with this previous swing low, then it fell down. But market didn't continue falling. It again went up, again reacted from the same area, fell down, but didn't continue to the downside, and made a new high here. Nevertheless, this new high didn't completely erase the probability of further downward continuation, because it made a Gartley. But this is the final hope for the bears. So let's calculate the things mathematically before finalizing our trade. Alright, so if I measure the length of retracement against this fall, it looks like market went to the 61.8 area already and reacted. And if I plot Fibonacci ABCD from down to the upside, %, also coincides with 61.8% of the previous one. So this is 109.47, this is 109.49, and there was a reaction from this area. And that can be understood by looking at this candle. This 1 hour candle looks like shooting star, which is a bearish candle pattern, but it is not perfect. Perfect shooting star has a small but bearish body, but it has a small but bullish body, which says that the buyers came into sellers and buyers struggled in this candle. When market reached this resistance area 109.49, 109.47, sellers came into the picture. This they put the selling pressure on the USD JPY, but buyers won the game by the end of the candle, and then it made a bullish body, smaller but bullish body. So this, but I was looking at the price action to understand whether this is going to work to the downside or not. But it didn't work to the downside. Market didn't fall from here, and next movement was faster to the upside. So there I entered my position around 109.47, and price is still around 109.47. Actually it's below it, so you can enter the buy right now, or you can wait for further fall, and then you can wait after 20% retracement against this ABCD. Because if Gartley doesn't work completely as the reversal pattern, at least it can cause a 20% retracement against this ABCD move. So it's up to you. You want to enter the position now, or you want to enter the position after 30% retracement. 30% is not so far from current price level. If we draw Fibonacci from this A to the D point, this is and if we calculate the 30% level, then 30% is around 109.422. So you can wait and see if price comes here, and then you can enter, or you can see the price action here. If price reacts at this area and start moving up, then entering buy will be even better. That will completely erase any risk of further fall. So you can look at the price action. You can go to the 5 minutes time frame and then look at the price action. If the speed to the upside will look faster than the speed to the downside, I mean this downward movement from this point to here, then you can enter buy. So it's up to you. Another thing, another supporting theory behind this buy trade is the relative strength index. When there are two scenarios, there is a Gartley, this is a bearish Gartley which is suggesting downward fall, and there is a scenario of buyers who has already taken over the sellers. In that kind of situation, we have to plot relative strength index to understand whether the strength of the USD JPY is enough to go to the upside or not. So let's check the strength. So I like to understand the strength on the basis of 24 hours. 24 candles are there in a day, and this will give me what is the strength in 24 hours. I plot a horizontal line here with parameter of 50, and if the RSI crosses above the 50, like it already crossed here, it shows that the market is strengthening and it will continue to the upside. So that is supporting the idea of buy, but there is still probability of fall because this is a bearish Gartley. So it's completely up to you whether you want to buy or you want to sell. I'm in the buy side and I'm targeting 110. 110 is giving me, I bought at 109.47, so if I take this price slightly above 109.47 to 110, it is giving me a target take profit of almost 52 pips, whereas my stop loss obviously will be set below this low of the candle, and that is a risk of only 29 plus few extra pips, because I have placed my stop 3 pips below this low, so this is around 33 or I think 32 pips, but risk is less than the reward, so the ratio of risk reward is very good. So this is one thing. Another thing is, if you want to sell, so I do not suggest to sell right now. I want to see if this Gartley is still powerful enough to work. Initially, this candle shows the story of the Gartley. This something like shooting star candle. So this shows that the Gartley didn't work correctly. Power of buyers are more than the sellers, which is why right now I'm not suggesting to enter the sell. Instead, I will suggest if you are bearish, then sell when the market penetrates below this point. This was the A, B, C. Sorry, C was here. So when market penetrates below the C point, this is the area around 109.25, then you can enter sell, and then you can target something around 109.70 or sorry, 108.70 or 108.70 or 108.90. And you can place your stop loss above this point. This is 109.68.4. So your stop loss will be from here to here around 42.9, 43 or 44 pips, including your spreads and one extra pip. So this is what you have to risk if you want to sell here, around 45 pips roughly. And let's check where shall we place our take profit if going for the sell trade. So going to daily time frame, and then I'll take Fibonacci to measure the retracement level 61.8 and 78.6, because other levels will be giving us too small target. There is no requirement of too small target right now as per this behavior. Every swing is a deeper retracement against the previous upswing. So this time, this is as per the previous nature of the market going to be a deeper retracement. So it will be 61.8 or 78.6. Okay, so remove this 0.3, select 0.786 and 618. So here you'll as I said, 108.90 and 108.70, but 108.90 will not give you a bigger reward if we measure the distance from your stop loss. Here I had suggested to set a stop loss here, and I had measured that it was around 45 pips, and I am suggesting you to enter the sell around 109.25 when this low will be taken out, low of this candle. This was the C point of the Gartley. The right arm was ABCD and C point was this one, around 109.25. So from here, if we measure till here, it is only 33 pips, which is small, 33 pips or 34 pips, which is smaller than your risk. So rather you should go for this target 78.6, which will give you 54, slightly better than your risk, 54 pips. Okay, so 108.70. These are the two scenarios which can be considered for trading USD JPY in upcoming days until release of non-farm payroll, because non-farm payroll will be taken over any technical scenario. It will not care what technical scenario we have. So we have to exit the position before release of non-farm payroll. So it's up to you. Right now I'm in the buy side. I'm waiting until the penetration of this 109.18 area, because this is where I have suggested stop loss in the buy. So thank you for watching, and go what suits better to you, because this time there is huge contradiction in sell and buy scenario. Although buy scenario is looking slightly better than the sell scenario, nevertheless I cannot insist on buy only. So that's it. Thank you for watching.